What's up, guys? Welcome back to my YouTube channel. It's Amos. In this video, we're going to go over all the best trades you could have caught today on Thursday, October 16th, 2025. There was multiple good opportunities you could have caught using the unfilled fair value gap strategy. So let's get right into it. The first trade that I saw was in the morning session. On this 4-hour chart, I can see that we are sweeping the previous daily high. Let's go on this daily chart so you guys can see it pretty well. I can mark out this line right here, which is my previous daily high. We also have a daily bearish fair value gap. As soon as we sweep it, what can I see? We are rejecting the previous daily high, and we are failing to close above this buy side liquidity pool, which tells me that sellers are being aggressive and responsive above this high. And then if I also take a look at this candle, what does it show me? It shows me that we're barely closing above the previous candle's high, which signals that sellers are extremely aggressive. Okay, it's a thing that, seeing price rejecting a buy side liquidity pool is a thing, but seeing price rejecting a buy side plus the previous candle's high is another thing. It's a really good setup. And here in this case, is that enough for me to take a short position and judge that a market structure shift will hold in order to create new lows here in this scenario? Not necessarily. But here, what do I have below me, and what do I keep talking about in every single video? It's the unfilled fair value gap. Okay, so here, if I go on this 4-hour chart, we have the buy side liquidity sweep, tap into the 4-hour bearish gap. We're barely closing above the previous candle's high, but we also have an unfilled 4-hour gap. What does that tell me? It tells me that buyers were so aggressive inside this range and were pushing price so aggressively to a point that there was not a fair exchange between buyers and sellers. Buyers were too strong, so this area right here is inefficient. Okay, it's called an inefficiency, and price is not at its fair value. Okay, and for the market to be healthy, we need to retrace back towards this fair value gap in order to find fair value and in order to be efficient. Okay, so here in this case, I mark out this low as being my drawn liquidity, and I know that price has way more chances of seeing the sell side than this buy side once this new candle opens up on the 4-hour chart. So then and only then I can scale down to this 1-minute chart, because I know that my framework is going to be accurate and my read on the market has already been made because of higher time frame candle closing and also opening. This is the most important concept in trading, power of 3 plus also unfilled imbalances and liquidity pools. So here I know that this low right here, this unfilled fair value gap, is a magnet, and it becomes my draw on liquidity. So I can mark this out here so you guys can see it pretty well. Call this DOL. And then when I know we have a lot of chance of seeing the low first, then I look for signs of aggression from those sellers. Now I scale down to this 1-minute chart. I can see that we have a 1-minute fair value gap that is being respected. We're creating high, low, higher high, and then we are breaking below the opening price of the last series of up close candles that created the sweep. So here we already have a small change in the state of delivery on this 1-minute chart. I can judge that this is the confirmation to go short from. Market, this was exactly the entry that I took. Stop loss right above this candle's high. Take profit at a 1-to-1 risk to reward back towards the unfilled fair value gap. This is an amazing this is an amazing scalp in my this is in my opinion an amazing scalp and a really good opportunity to scalp this unfilled fair value gap. And with the higher time frame context, you cannot go wrong here. Even if price decides to shoot up and stop you out, the overall framework is not going to make you crash out. Okay, everything was aligning together, everything was clean. So for you to take an entry, even if you take a loss on this trade, I would be okay with taking a loss in this setup because everything was extremely clear on the higher time frame. So here, let's see what price is doing. We're chopping a little bit. We created that SMT here with ES, which made price create a new high and sweep the most recent buy side liquidity pool on this 1-minute chart. But then after a few minutes, we hit the target right here back towards the unfilled 4-hour fair value gap. For the rest of the day, we had a really clean trade happening right here, which I took live on my YouTube channel. Okay, Amos PFT. I took it live on my YouTube channel around around this time, so 2:30 p.m. and let me show you guys the framework behind why I took it. So here, when I saw this first displacement candle, I knew that every time I see a displacement candle, I know that I could be potentially taking a trade. Why? Because I know that price always goes from a state of balance to imbalanced, balanced to imbalanced, balanced, imbalanced. And when I see this, how do you want me to locate myself and take a trade inside this chop? It's impossible. I do not have enough information about market participants. Here, price is transacting at a fair value. Why? Because buyers and sellers agree on price, so price is going nowhere. When sellers, and let's say sellers are going to be extremely aggressive, and those buyers are not going to agree on this price, then price is going to sell off. Okay, so here I need to see displacement from one side, so either to the upside or to the downside. I want a higher time frame for value gap to get created, so I have information of who's controlling the market, and if I could potentially see a pullback when those market participants are going to start being squeezed and are going to start being exhausted. So when I see this candle right here, what do I see? I see displacement. I know there's a lot of aggressive selling happening. So now what do I know? I know that a fair value gap is composed of 3 candles. So this would be the first, this is the second, and if this third candle opens up, is failing to accept price below the previous candle's low, closes back inside the range without ever trading into the first candle's down wick, I know that I have a potential trade because an unfilled fair value gap is going to get created. And when those gaps are being created, it tells me that there wasn't a fair exchange between buyers and sellers. Sellers were too aggressive. Price is currently inefficient. And for it to be healthy, we need to retrace back towards this fair value gap in order to find fair value. Okay, this is the principle behind this model. So here, let me show you guys what happened. So now I want to take a look at this 15-minute candle and look for potential signs of aggression from those buyers and signs of weakness from those sellers at the low. So here, let me show you guys what happened on this 15-minute chart. We have this candle that is failing to accept price below the previous candle's low. We also have this unfilled 15-minute gap. What does it tell me? It tells me that price has way more chances of seeing this unfilled fair value gap right now. Timing is extremely important in scalping. You have time right here, price right here. So the Y is the price, the X is the time. If you don't align them together, you're gonna get cooked. Okay, so here I know that my most recent draw on liquidity should become this 15-minute gap because price is exhausted of going down to one-sided. For now, we need a healthy retracement. Now I go to this 1-minute chart. Really good opportunity here to not take a long. Why? Because even if this candle is closing back inside the range of the previous one and you have an unfilled above you, this is when the 1-minute chart is going to be your best friend. Yes, you have the framework, but you need to align also the lower time frame confirmations in order to take a scalp. So here, do you have anything to take a long from? No. You disrespected this bullish fair value gap right here, which should have held if we were truly bullish. So now I'm not looking to go long from this level. I want to look for potential open low, breaker block, and as soon as we create that breaker block, then I will use it on basically to go long from, because this would be a covering area. Okay, so here, let's see what price did. We opened, we went lower to sweep liquidity. So this is an open low on the power of 3. So the new candle opened up on this 15-minute. Okay, this is the close. Okay, you guys will be able to see it pretty well. This is the close of this 15-minute candle. Okay, a brand new candle is going to open in 1 second. So if price opens lower, so opens, goes lower first, and then starts to push up, what does that mean? It means that we have our accumulation, manipulation, distribution model. What does that mean? In reality, you created the down wick of a future bullish candle. This is the most important concept. If you expect this high to get taken out, which is your 15-minute gap, your drawn liquidity, and a new 15-minute candle is going to open and you don't have the right structure in order to long back towards the unfilled gap, then you wait for price to create the open low, creation of the down wick of a future bullish candle, push up, flip above the opening price, market structure shift, and then you would judge that this low is protected, and then this market structure shift will actually have substance and have enough buyers in order to push us up towards the unfilled gap, because it is an absolute freaking magnet. Okay, so here, what did I do? I waited for price to open lower. Right here, we have a bearish or value gap. If we're truly bearish, we should hold this level in order to create a new low. Right here, what happened? We disrespected it extremely aggressively. So now I knew that this zone was definitely going to be the support level to create new highs. And then what did I decided to do? I went to this 2-minute chart and I saw the best possible entry, which was here, that change in the state of delivery. What is a change in the state of delivery? It's when you create a high. So let's say here, low, high, lower, low, and then you break above the opening price of the series of down close candles that created the sweep. Series of down close candles that created the sweep is this. So if you break above the opening price of those series of down close candles, then you have what we call a change in the state of delivery, which is just an entry model to target your drawn liquidity, which is your unfilled gap. So here in this case, what did I decided to do? Go long, stop loss right below this candle's low, take profit where? At a 1-to-1 risk to reward back towards the unfilled. Is the 1-to-1 risk to reward extremely important? No, it's just to give you a signal that you want to be consistent. You want to find quick scalps in and out of the market. You do not need to aim for 1-to-3s, 1-to-4s, 1-to-5s in order to be profitable. You just need consistency and need to master your own model. But will I take out my profits right here for a 1-to-1 if I have my stop loss right here? No, my target is the unfilled gap. This is my framework. Okay, I don't go for points, I go for targets. So here I would long limit order just right here in the change in the state of delivery, then wait for price to tap you in. This is where I would put my stop loss, take profit right here, and let's see what price does. As you guys see, in 6 minutes I hit my target. Beautiful trade that I saw here, that I took live with y'all on the YouTube channel. I appreciate you guys so much for listening to this video. Hopefully you enjoyed, and hopefully you also learned something new today with this strategy. If you want to see me live trade this strategy every single day from 10 to 11 a.m., make sure to hit this link down below to join my Discord, which is called Pockets Full Trading. Also, if you want to trade with the best prop firm in the game, make sure to try out Tradeify. They have accounts where you don't even need to pass any evaluations. They're called lightning accounts. And to support your boy, make sure to use code AMOS for the highest discounts. Appreciate you guys so much, and I see you guys on the next one. Peace out.